Good afternoon, everyone. It's Tuesday, September 18th. So we're about 48 minutes after the close today, and I just had some observations I thought I might convey to all of you. Basically, if you throw out the noise, or the news rather, sort of a Freudian slip there, but if you throw out the noise with the trade tariff news, which sent the futures down, I saw the NASDAQ down minus 40, more than that, last night, and China actually opened, it sort of fluttered around last night, up and down, and finally everything took off. So overnight, you had the futures up a little bit, and from there we took off and rallied. But if you look at the, say, the NASDAQ chart here, you can see that you just came down to the top of this range that occurred in August and July. So you bounce off of that, but you're still in this sort of descending wedge kind of thing. So there's nothing really conclusive in the action here. I also thought some of the stock action was a little bit of a mixed situation that didn't strike me as screaming to be bought. If you look at the S&P, this same thing here, it pulled into the 10-day line, the 20-day line here, and really is just in this little sort of a cup with handle, and that looks relatively coherent. So if you forgot about the news, all you would do is look at the charts here, and you could surmise that you might find some support in here and try and bounce, and that's what happened. But you did stall a bit on the NASDAQ. Now, the interesting thing here is that even though China rallied, we saw the FXI was up here, but it's actually, it was already rallying last week, and then the first couple days, or rather Friday and then Monday, yesterday, you were down a little bit with volume decline on the FXI. But for the most part, all you're doing is trundling around in this range, and you might say it's even a declining channel, but we'll see what happens with this. But there's really nothing decisive, nothing that you would call even, say, a follow-through day or turnaround in the Chinese markets. If you look at some of the stocks, there were some things doing pretty well. Let me shift over to my HGS Investor. Now, if I look at everything, I'm looking at all securities with a filter, with everything with volume, or anything and everything that had volume up 25% or more. So if I look at this and break it down by industry, I can get a pretty good picture of what was moving today. And most of you have NA, which is this purplish color in here, but you can see it's a pretty good smattering of just about everything. Oil and gas, REITs, application software, infrastructure software, specialty pharma, oil exploration and production, etc. And pretty well mixed up. You can see here biotechs were one major group that was leading, in REITs as well, because you had bonds were selling off actually, and you had the TNX making a move back over the 3% range, so it closed at 3.04. That's its highest level since back in May, and I think we had a correction in the market at that time, or shortly thereafter. Let me take a look at that real quick. No, my mistake. Actually, you rallied when interest rates fell over. So, anyways, so today we had some biotechs were moving, but I didn't really see anything that I thought was all that compelling. If we look at this, RGNX, RegenX Bio, this is one I was looking at, and it had a pocket pivot here, and then another breakout here. I looked at over the weekend as a trendline breakout, but notice how it quickly failed. So not really what you want to see. And then you get a nice move here, but there's really not much going on there. Some of these other biotechs that we've been looking at, Amgen, hanging in there okay after a breakout here. So that was a breakout last week, and it's holding up technically within buying range if you'd like to buy breakouts. But you can see the names like Biogen, for example, still kind of hanging along the lows. Gilead, which is another one of the big stock biotechs, kind of hanging along the lows of its formation, not really showing all that much strength. Celgene, also same situation there. And a lot of it, even some of these other crazy little biotechs and medicals that were running, like this Tandem finally corrected real hard off the peak a couple days ago, last week, and then bounced off the 50-day on pretty heavy volume, and it was up. So you have some situations like that, but I don't really see that these are suddenly something to move into. Now, things that were moving, and it was a little bit surprising to me because I would have thought that the tariffs would hurt railroads. and they're really not going to benefit that much from the NAFTA thing. But you had a gap up in NSC, and this is one we've been following for a while. So slow movement along the 10-day line, and then boom, you get a gap up move today. So if you've been holding this stock or playing it, you might have seen that this morning, and you could have played it, I suppose, as a viable gap up. CSX Corp not really doing anything, kind of churning around. Union Pacific had a big gap up, but it sort of churned around, and you'd call this a spinner. So it was just spinning around up there on the gap up. So not really clear to me that I'd want to jump all over these as massive growth names, because if you look at these things, they're selling at more than 20 times earnings, I believe, in most cases. Let's just take a quick look. So if we look at NSC, great earnings growth and selling at 23 times earnings, which is kind of odd for a rail. I mean, in the old days, rails used to sell at 4, 5, 6 times earnings. Now, of course, in the age of QE, money's got to go somewhere, and why not into rails? So if you look at CSX, another one, decent earnings growth on very light sales growth, and it's continuing to move higher. And Union Pacific, another decent grower. I mean, not spectacular, but 23 times earnings is what these things are going for. So are these going to have a huge move to the upside as big leadership? That's tough to say, but I guess you could always play these. For example, if you wanted to play this one as a viable gap up, then you would simply use the 162.85 low of today as your selling guide. Anyways, what I thought was interesting is that the Chinese moves, the Chinese stocks, despite the nice move in the Chinese markets, didn't really go anywhere. I mean, there's two that I've liked, Bilibili, which I thought was one of the better ones, and Momo, which I thought was the other better one. And then after that, it was kind of like, I'm not really that interested. And you can see these are acting okay, but they're not really in viable positions. I guess Billy was yesterday as it came into the 65-day exponential, but today you're back up. So if you look at some of these other ones, IQ is down, Ikiwi, and Huya was down, and Baba was down, and JD is still down at its lows. No big rally there. If I look at some others, let me just pull up my list over here. We can see also this one. Remember I talked about this one over the weekend. This one that was playable last week when it had a voodoo volume signature right here and was holding tight at the 10 and the 20, and then it launched. Of course, it gives all of that up in 3 days. The question now is, does this become viable coming into the 10-day and the 20-day? And I suppose maybe it does, maybe it doesn't, but you could, as close to the 20-day as possible, you could step into it here and see if you get some juice on the upside. But sometimes Cinderella only comes to the ball once, and you're not going to get another big move out of something. Anyways, you have that. Baozun also. We're just going to ignore the telephone. Baozun's below. I don't know what happened there, but you're still below the 40-day line. You can't get up. Help, I've fallen and I can't get up. That's what Baozun is telling you. And you would think with Momo doing well, this one might be doing okay, but no such luck. Autohome, which is another one we were following a long time ago, is really going nowhere. It's just kind of spinning around underneath the 20-day here today, stalling, trying to rally back above these lows, but nothing really impressive there. So, if you're trying to think in terms of, okay, well, China was strong and it's been down for a while, maybe now with these tariffs out of the way and they weren't as bad as they were supposed to be, 10% instead of 25%, all these Chinese names, you want to jump into them. I think you really have to lay back and look at what the setups look like and not really just start jumping into everything, because it's pretty clear from today's action that just jumping into any Chinese name would not work. Although I thought, if you got a good rally in the Chinese markets on some positive tariff news, as in there are no tariffs and China is going to become a capitalist democracy rather than a totalitarian closed command economy, then maybe you'd see some massive move in Chinese names, and then you could just throw darts. But I think that was also last week when things moved off their lows, like Autohome, and I think Baba and a few others had some little reflex rallies off their lows. But really, that was it. So today on my screen, some of the things I was noticing, Cleveland Cliffs continuing higher, CyberArk you had, I guess you would call this an undercut and rally of these lows here, and that's a pocket pivot volume signature, but notice how it didn't really close along any of its moving averages or find support at any of its moving averages. So I don't think that really counts. So Funko trying to find support at the 50-day and the 65-day exponential. I believe it may have gotten close to this low. Let me check this real quick. The low here is 1856, and this low here is 1818. So it never really did undercut that low. So I don't think you call it an undercut and rally, but it did get back above the 50-day moving average. So on that basis, you could say, okay, I'm going to buy this and use the 50-day moving average as my selling guide, as a moving average undercut and rally type of setup. See if that works. But I wouldn't be surprised if you were able to get at some point some kind of a reflex rally back up to at least say the 10 or the 20-day, which could from here could be 15-20%. But I think it might tend to be a trade, but we'll see. In this market, I don't think you can assume anything. And I can tell you one thing: wasn't looking for a big rally today. On the other hand, I would say in terms of individual stocks, the rally wasn't the most powerful thing that I've seen. There were some other issues I saw in certain groups. For example, some of these cloud names. ServiceNow is down and it's back at the top of its base. So is it viable there? Well, I suppose you could test it. Workday, which I thought was a short over the weekend in my video report, that did come down, so it's back down into these lows. Volume was about average, actually minus 1.6%, so pretty much even, and just coming back in. Another one that is a cloud name is Splunk, and that one's coming back down. That was a viable gap up here. It was a streaker, so it opened low, closed high, continued high a little higher, just by a little bit more, and then it's rolling over again, coming back into the top of the breakout point here. So does this become viable here? A lot of times they look ugly and you don't want to touch them, but you do have to watch them. If you like this stock, if you like the story, and I would say this goes for any other name coming in like this and coming in towards a potential buy point, in this case the intraday low of the gap up day, which is down at 114.35, then you might look at buying that. So, but again, I think it's a little bit sketchy. I noticed some of the big stock names, Amazon bouncing off the 50-day line yesterday, and a little bit of an undercut and rally type move there. Apple's been kind of bouncing around, but notice how you stalled. You tried to open, you opened flat, then you ran up to here, and you reversed and closed near the low. So a little bit of a shooting star look. And that's what I'm talking about when I'm saying that you're not seeing very even action among stocks. And it makes me wonder whether we're going to see either some more choppy action, where it's really hard to make any real progress either way, or we come off a little bit more and correct some more. And I guess maybe some of that will depend on what the news flow is over the next few days. If China retaliates, and Trump has already said that if China retaliates, then he's going to lay on another $257 billion of tariffs, or rather tariffs on another $257 billion of Chinese goods coming into this country. So, we'll see what happens. It's very difficult, I think, right now to be deploying fresh cash and trying to build new positions. If you have existing positions that are holding up, then that's fine. You just know where your selling guide is, and you stick to it if things start to get crazy. But I think right now you're in sort of a funky environment where what you think is going to happen doesn't happen, and things are kind of choppy, so some things are working and some things aren't. For example, I noticed NVIDIA was reversing. You can see the reversal here. Meanwhile, you got a piece of junk like Micron is trying to rally off of its extreme lows here, but it's sort of between there and nowhere, and trying to come up to this low here, but just barely getting above the 10-day line. In addition, you saw names like Facebook, for example, doing nothing, just kind of hovering down at the lows, not really able to get anything going, even on a day where you have a pretty decent rally, not quite 1% in the NASDAQ 100, but I mean, a reasonable rally day, and you would expect to see more strength in other places. Now, Netflix won some Emmys yesterday, so of course they rally back above the 50-day moving average. And right now, all they're doing is chopping around in here, so it's tough to play outside of a day trader, long and short. So you get a 5-day pocket pivot here, but that's it. And I'm not sure what to make of this at this point. I think we'll just see where the market goes. But I think it's a good idea to have some dry powder and hang loose and just let things come to you rather than chasing things. And if the action surprises you, like if you were surprised by the rally this morning, you can go back and look at the charts, and like I said, you can see how there was a context for a bounce because the Nasdaq came into the top of this area of consolidation from late July to late August, and it made sense that you could get a bounce. So, you know, sometimes if you just kind of put the news aside and you look at what the charts are doing, things make a little more sense, and you at least have some sense of control in terms of understanding things. But it's still funky on an individual stock basis, and things are all over the place. Just real quickly, some other things before I sign off. This one had Planet Fitness had a pocket pivot at the 50-day, also an undercut and rally. So you could mess with that if you wanted to. Triple D looks like it's trying to turn around. That's a 5-day pocket pivot coming back into the 10-day and the 20-day. An undercut and rally move off of this low here occurred on this day. Surprisingly, it retested. Now it's trying to set up again. So I don't know. We'll see if that one works. Okta also pulling into the 10-day like I was talking about in the report and getting closer to the intraday low of the Bible gap up day, and holding above the 10-day by the close and looking kind of normal. But you know, you'd like to see more velocity develop after a Bible gap up, and I think it's just a function of a funky market. So anyways, last but not least, if you guys recall, a couple weeks ago I talked about watching Yelp, and it's set up right along the 20-day line. You didn't really get an undercut and rally here, but you had a big breakout today on this flag sort of formation. But I thought it was just interesting that it took off. Anyways, that's all I've got for now, everyone. As always, thanks for showing up, and we'll see what happens tomorrow.